Hello everyone, welcome to my YouTube channel. In this particular video, let us solve one more problem related to income from house property. So the question is on the screen. Determine the net annual value, that is NAV, of Mr. X in the following cases. There are three particular houses. So they have given expected fair rent, municipal value, standard rent, annual rent, unrealized rent, and local tax paid by the owner. So in these cases, they have not told whether the all three houses are LOP or all the three houses are SOP. If they have not given any information, just check the question. See, in this question, they have given annual rent for all the three houses. When they have given the annual rent for all the three houses, it means that it is LOP. ಆನ್ಯುವಲ್ ರೆಂಟ್ ಕೊಟ್ಟಿದ್ದಾರೆ ಅಂತ ಹೇಳಿದ್ರೆ ಮೂರು ಹೌಸಸ್ ಅದು LOP ಅಂತಾನೆ ಕನ್ಸಿಡರ್ ಮಾಡಬೇಕಾಗತ್ತೆ. So now we have to calculate the net annual value of each houses. So now you have to draw a table consisting of 4 columns. First columns will be particulars. Second column will be house 1 amount. Third column house 1 amount. Fourth column will be house 3 amount. We will solve one by one. Single houses we will solve so that you will not get confused. First, always you have to compare municipal rental value with fair rental value. So MRV with FRV. You will compare municipal rental value with fair rental value. So in the question they have given the municipal rental value of house A is 72,000. So I will write that 72,000 here, municipal rental value. Next, fair rental value. Fair rental value they have not given. When they have not given, no, they have given, sorry, expected fair rent they have given. It is 84,000. So fair rental value will be 84,000. Out of these two, whichever is higher, we have to consider it as notional rent. ಇದೆರಡರಲ್ಲಿ ಯಾವುದು ಜಾಸ್ತಿ ಇರುತ್ತೋ ಅದನ್ನ ನಾವು ನೋಷನಲ್ ರೆಂಟ್ ಅಂತ ಕನ್ಸಿಡರ್ ಮಾಡ್ತೀವಿ. Next, that notional rent will be compared with standard rental value. Notional rent na ಇಲ್ಲಿ ಫೈಂಡ್ ಔಟ್ ಮಾಡಿದೀವಿ 84,000. ಈಗ ಈ ನೋಷನಲ್ ರೆಂಟ್ ನ ಸ್ಟ್ಯಾಂಡರ್ಡ್ ರೆಂಟಲ್ ವ್ಯಾಲ್ಯೂ ಒಂದಿಗೆ ಕಂಪೇರ್ ಮಾಡ್ತೀವಿ. In question they have given standard rent is 80,000 for house 1. So standard rent is 80,000. We will compare 84,000 and 80,000. Out of two, whichever is lesser. So 80,000 is lesser. That will be considered as reasonable expected rent. So 80,000 is our reasonable expected rent. Now this reasonable expected rent will be compared with actual rent. Reasonable expected rent na actual rent ondike compare ಮಾಡ್ತೀವಿ. The formula to find out actual rent is annual rent minus unrealized rent. Actual rent na ಕಂಡುಹಿಡಿಯಬೇಕಂದ್ರೆ annual rent ಮತ್ತೆ unrealized rent ಇದೆರಡರ ಡಿಫರೆನ್ಸ್ ಬಂದು actual rent. First let us calculate for house 1. First only we'll be calculating for house 1. House 1 ಗೆ ಮಾತ್ರ ನಾವು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡ್ತಾ ಇದೀವಿ. So in house 1 they have given that annual rent is 1,20,000. So annual rent is 1,20,000 minus unrealized rent. So in question they have given very clearly unrealized rent is 30,000. So 1,20,000 minus 30,000 if you do, you will get the actual rent of house 1. The actual rent will be 90,000. Out of these two, whichever is higher, ಇದೆರಡರಲ್ಲಿ ಯಾವುದು higher ಇರುತ್ತಲ್ಲ, that will be considered as gross annual value before vacancy period loss. 90,000 is higher than 80,000, so it will be considered as gross annual value before vacancy period loss. From that we have to reduce vacancy period loss. In question they have not given any information regarding vacancy period loss, so it will be considered as 0. So after deducting vacancy period loss, we will get gross annual value after deducting vacancy period loss. From that, we have to subtract the municipal taxes paid by the SSC. So whatever the municipal tax the SSC pays, that has to be subtracted. In question, they have given that for house 1, the tax paid by the owner, that is SSC, is 6,000. So that 6,000 should be deducted. So from 90,000, if I deduct 6,000, I will get 84,000. That 84,000 is my net annual value. 84,000 is my net annual value. This is for house 1. Now let us solve for house 2. First we have to compare municipal rental value with fair rental value. For house 2, municipal value is 72,000. So I will write that 72,000 here. Fair rental value. So expected fair rent. Fair rental value is 84,000. So 72,000 and 84,000. Out of these two, whichever is higher, that is 84,000, it will be considered as notional rent. So we got to know the notional rent. Now this notional rent should be compared with standard rental value. So in the question they have given standard rental value is 90,000. So I will write that 90,000 here. Out of these two, whichever is lesser, ಇದೆರಡರಲ್ಲಿ ಯಾವುದು ಕಡಿಮೆ ಇದೆಯಲ್ಲ, that will be considered as reasonable expected rent. Out of these two, whichever is lesser, we will consider it as reasonable expected rent. Now we have found out the reasonable expected rent. That reasonable expected rent should be compared with actual rent. So reasonable expected rent should be compared with actual rent. To calculate actual rent, there is a formula. That is annual rent minus unrealized rent. Annual rent minus unrealized rent. So now we are calculating it for house 2. So they have given annual rent. Annual rent is 1,44,000 in the question. So I will write that 1,44,000. From that I have to subtract unrealized rent. For house 2, the unrealized rent is 72,000. So I will subtract that 72,000. The balance will be 72,000 only. So that 72,000 will be actual rent. Now out of these two, 84,000 and 72,000, whichever is higher, that will be considered as GAV before deducting vacancy period loss. So 84,000 is the higher. So 84,000 will be considered as gross annual value before deducting vacancy period loss. From that you have to deduct vacancy period loss. But in the question they have not given any details regarding vacancy period loss. So consider it to be 0. Next, the balance you will get, that is GAV after deducting vacancy period loss. From that you have to subtract the municipal tax paid by the SSE. In the question they have given that the SSE or the owner has paid 12,000 municipal tax. So that 12,000 I will subtract from 84,000. The remaining balance, that is 72,000, will be net annual value. The remaining balance will be 72,000. It is net annual value for house 2. Similarly, we have to do for house 3. First, we have to compare municipal rental value with fair rental value. So municipal rental value is 72,000 and fair rental value is 84,000. So we'll compare both 72,000 and 84,000. Out of these two, whichever is higher, 84,000 is higher. So 84,000 will be considered as notional rent. So we have found out the notional rent. That notional rent should be compared with standard rental value. In question, they have given that standard rent is 78,000. So I will write that 78,000 here. I'll compare both of them, 84,000 and 78,000. Whichever is lesser, 78,000 is lesser. That 78,000 will be considered as reasonable expected rent. So we have found out the reasonable expected rent. That will be compared by actual rent. Reasonable expected will be compared with actual rent. There is a formula to calculate actual rent. It is annual rent minus unrealized rent. The formula to calculate actual rent is annual rent minus unrealized rent. Now we are calculating for house 3. So annual rent. So in question they have given that annual rent is 1,80,000. So this annual rent, I have to subtract the unrealized rent quotient from that. So 1,80,000 minus unrealized rent. Unrealized rent is 72,000. So I'll subtract that 72,000 from 1,80,000. The remaining balance will be 1,08,000. That is our actual rent. Out of these two, whichever is higher, 78,000 and 1,08,000. Out of these two, 1,08,000 is higher. So that will be considered as gross annual value before deducting vacancy period loss. From that, we have to reduce vacancy period loss. Vacancy period loss, they have not mentioned anything about that in the question. So it will be 0. So the remaining balance will be 1,08,000. So that 1,08,000, I will, that 1,08,000 will be GAV after deducting vacancy period loss. So that 1,08,000 will be GAV after deducting vacancy period loss. From that, I have to deduct the municipal tax paid by the SSE. For house 3, 18,000 is a tax paid by the SSE. So I will write that, deduct that 18,000. After deducting that 80,000 from 1,08,000, the remaining balance will be 90,000, and this 90,000 is the net annual value. This is how you need to solve the problem. Hope you have understood how to solve the problem. This might be asked for section C because they have asked for 3 houses. It's a very simple problem. If you have any doubts or queries in this problem, please put your doubts and queries in the comment box so that I would like to respond to your doubts and queries as soon as possible. Thank you for watching the video. I'll come back with the next tip.